Hi kids, you are welcome to the Accounting ABCD, which will help you understand the basic terms used in accounting. A for assets. Assets mean all the property of the business, like cash, bank balances, furniture, machinery, etc. B for bank. Bank keeps our money safe from theft and helps transfer cash from one person to another without going anywhere. The bank gives us interest on our money. C for capital. Capital is the investment made by the person in his owned business. Capital is not the only cash, it also includes other things like furniture, cars, machinery, etc. D for debtor. Debtor may be a person, company, firm, etc. who owes the money of our business. Suppose you sold all the chocolates on credit to Kamlesh, which means you didn't receive any payment. So in your business accounts, Kamlesh is a debtor. E for expense. Payments for the articles and services. Examples: groceries, rent, etc. F for fixed assets. Assets whose life is more tan 1 year. Example: land, building, car, etc. G for goods. Goods are the articles purchased by the owner of the business for sale with the intention of making a profit. Like the books are the goods for the bookseller, jewelries are the goods of the jeweler, and vegetables are the goods of the vegetable seller. H for hire purchase. Customer can buy the articles with the down payment, and the balance payment will be paid in installments with interest. I for interest. Interest is the amount given by the bank to the person for using their money. J for journal entry. Journal entry is the language of accounting. It has the debit and credit sides. Cash account debit to capital account with 100. K for kiting. Issuing the check without sufficient funds available in the bank account. Example: a check issued for 5,000, but the balance available in the cash is 4,000. L for liability. Liabilities are a debt on the business, which means when the business owes money to outsiders. For example, a loan borrowed from the bank, purchasing machinery on credit, or purchasing goods on credit. This means the payment is not yet made. M for money. Money is the medium to receive and make the payments. For example, if chocolates are purchased, the payment is made in cash. N for net profit. Amount earned after deducting after all the expenses of the business. P for profit. Profit is equal to sales minus cost. 2 is equal to 12 minus 10. Q for quick assets. Assets that can be easily converted into cash. Example: cash, bank, debtors, etc. R for ROI. Return on investment means profitability of the investment or the business. S for stock. The articles were purchased by the owner of the business for sale. There are 3 types of goods. 1. Raw material, the material that is completely unprocessed. 2. Working in progress, the goods that are incomplete are not ready for the same. 3. Finished goods, 100% complete goods that are ready for sale in the market. T for tax. Taxes collected by the government of the country to pay the expenses of the country, like making the roads, hospitals, schools, salaries to government employees, etc. U for useful life. Time period of an asset that can be used in the business. For example, the useful life of a car is 10 years. V for valuation. Calculation of the product or business financial. W for wages. Payments are paid to the laborers in the factory for their services. X for currency. Foreign currency that is used outside its country. Y for yield. Return on the investments. Example: you purchased your house for 10,000, which is the rent of 100 per month. 100 is the yield. Z for zero coupon bond. Bonds that do not pay interest to the bondholder. Book accounting for kids available on Amazon. A beautiful conversation between the author Vipin Kumar Varma and his beautiful little sister, age 8 years, on the basic concepts of accounting will help the children understand the basic terms like what is capital, debtor, B2C.